Hello guys, welcome again to another BTC video. I hope you are doing great today. I have another Bitcoin video for you today, so please stick around till the end of the video so we can analyze BTC together and see what's up with it. So with that being said, we're gonna jump straight to the charts and start analyzing first the higher time frames and then go down to the lower time frames to tell you what I see. So I'm gonna jump to the monthly because last time people were talking to me about the monthly time frame and they were telling me, oh Maze, what about the monthly? You didn't analyze the monthly. So I'm gonna be analyzing the monthly right now and telling you that nothing has changed in my opinion for the monthly, and I'm gonna show you why. So currently there's two things that I'm looking at which are pretty good for Bitcoin on the monthly. So the number one thing is that I'm seeing is that we're always closing near this 18 EMA on the monthly time frame. Now it is good because, as you can see, we've never really lost it before. We've never closed under it before. We have gone, so except this one, but it's just barely a close. We have wicked towards it and found it as support, but we've never actually closed below it, right? So right now we are hovering around it. That is a positive sign for a bull trap, but it's obviously a negative sign for the bear market because this just confirms more and more that there's weakness in structure and in price action. And we are currently still in a bear market. So it's not like this bear market is over. Now, obviously, nothing's going to go down in a straight line. And last time in 2017, it took around 5 months for BTC to capitulate, as you can see here. So it took around 1, 2, 3, 4, 5, 6, 7 months before capitulation happened, before losing that horizontal level of support. So this happening over this time frame or this period of time is pretty normal. It's not like the end. It's like, oh no, it's impossible. It is possible for this to be playing out, and I suspect that it will take a long time before capitulation. Now, obviously, we have a strong support currently at 32.8, so it's gonna be bouncing around. And this, obviously, these EMAs are gonna be obviously going up or moving up as we move in price action. But I expect this to hold for a few months before capitulating. So take advantage of the range that it's going to give you. I'm assuming that it will give us a nice proper range between low 30s and high 40 and low 40s to mid 40s. Only reason being I'm saying low to mid because, as you can see, the 18 and 30 EMA right now are currently coming in around 45,000 and 44,000, and they're bearishly crossed. And as long as the BTC goes to that area, it's going to get rejected and drop basically. So and that's why we're not having a strong bull trap. Now we might have a bull trap, but like I said before, and like I've told you guys before, the only way a proper bull trap to even 50 is in play if we break 45. If there's no candle close above 45, I even gave last time 43,800, a 4-hour candle close, or a 3-day candle close above 43,800 might give us a 47,000 region BTC. It didn't happen. So you have to remember because I've seen some messages on Twitter saying like, oh, you said 47. No, I didn't say 47 is there. I said 47 is there if this happens. There's a big difference because you have to understand TA is probability. I'm not here to bullshit you. I cannot predict the future. I use probabilities and statistics to try to see where this might head, where there's a higher chance for this to head, basically. So with that said, the monthly is still bearish. There's no sign of that. Obviously, I don't expect this monthly to be bearish all the time. We can flip and resume the bull run only if these stochastic and signal line and stochastic line cross bullishly above 20 level on the monthly time frame. Then that will signal a potential resumption of the bull run. As long as these stay below 20, we are in a bear market on the monthly time frame, and most likely we will consolidate our range between mid 40s and low 30s till finally either capitulation happens or a breakout to the upside happens. And I'm saying or because this time it is different. So it doesn't necessarily have to be same as before where capitulation will happen. I have a target of 23.5 BTC, but I only, and I've said this like a million times, I'm going to repeat it again. If Bitcoin taps 30 again, $30,000 again, 23.5 is going to be on the cards basically. That's my personal opinion. From a trading perspective, I think people will long there, and then liquidation, capitulation will happen, and people will call it a black swan basically. So that's my analysis for the monthly. For the weekly time frame, again, very weak move to the upside, but it is upside move on the weekly, and as you can see what's happening, we're getting more of a consolidation than a proper push, and I'm worried that this will give us the consolidation rule playing out, which basically tells us that our indicators on the weekly are bullish, but we are consolidating on the weekly, and that basically signals a drop. Now, I would really urge you to take advantage of this channel on the weekly time frame. What most traders do usually is they miss out the opportunities on shorting the top or longing the bottom because they're scared of a breakout either direction, and usually the breakout never really happens. So people expected to break out here, here, here. It didn't really happen, and people expected capitulation here, here, and they're gonna expect capitulation one more time around this area. Now, it is different for the bearish side, so this might break, and the only reason I'm saying that this might break is, and not this one, not the higher region of the channel, is because the general trend on the monthly is bearish. So most likely a drop is more than a pop to the upside, basically. But yeah, weekly time frame is bullish, is not bearish, but we are consolidating, and I fear if this continues like this and we're not able to break that 45k region, we will drop on the weekly once more and test those low 30 regions again once more. So that is for the weekly time frame. For the 3-day time frame, actually the 3-day time frame is looking kind of ugly and nasty in my opinion, and I'm going to explain why. So this is the 3-day time frame. Let me remove the EMAs. As you can see, we are forming a type of double top scenario on the 3-day time frame. My squeeze indicator is green, and the 3-day is about to cross bearish. So with that said, this will give us at least 2 weeks, basically, or maybe like a 12 days where this will finalize its bearish move. So I think over the next couple of 12 days, Bitcoin will be bearish more than bullish, based on the 3-day time frame analysis. We are forming a bearish divergence as well, as you can see. So exaggerated, but it is a bearish divergence, and it's not looking healthy for Bitcoin. Honestly, it's not looking really healthy, but this is what you would expect in a bear market. So I mean, you're not going to expect anything else other than that. So sorry, those are my puppies behind me. So yeah, so that is my analysis for the 3-day time frame. I'm gonna go to the daily and tell you what's happening on the daily. So if you remember, I was telling you guys that the daily time frame, basically what needs to happen for us to have a move to the upside, and which will confirm the break of 45, will be a stochastic holding the 80 level. As you can see on the daily time frame, the stochastic fell below the 80 level and currently is sitting around 50-ish. So there's still no confirmation of the bearish cross. The signal and the stochastic line need to cross below 50 in order for this to continue to the downside. It's looking pretty ugly. It's looking like this is going to drop, in my opinion. I still believe we're going to go to the bottom of the channel eventually with a rejection on the heart line, but I think it's happening. I think it's going to happen. The indicators are bearish. They're not very bullish. We are also, if you can see, under the EMAs as well on the daily time frame, so we are bearishly crossed, and behold, the 18 and 30 EMA right now are coming in around 40,300. So and I posted this on Twitter. Let me just go to the 1 hour time frame, because the 1 hour, the micro time frames are bullish. They're not really bearish right now, but I did post this on Twitter, and I said that be careful, there might be a rally to the upside where you have basically a rejection around the heart line, and that's going to be, if this happens, this rejection happens, that's going to be your confirmation of that bottom of the channel being reached. Now the bottom of the channel currently is sitting in around 35,300, around that area. We don't really need to go there 100%, but we can go there like approximately to that region. So something between 36 and 35 is considered to be the bottom of the channel. And yeah, even though, like I said, the micro time frames like the 1 hour are bullish, but they're not bullish for too long, basically. So just be careful, because the general trend on the daily time frames is bearish, is not bullish. Now I've also have my fib retracement popped up here in front of you, just because I have a point of confluence also around or between 41,100 and 0.618. So this is the golden pocket. If we do manage to break this area right here, you can expect a rejection right here around this region. A partial or full will be dependent on the indicators, obviously, so I will have to analyze by then, but there will be a rejection there if we're able to close a 4-hour candle above the heartline of the channel. So this is where we're heading towards the golden pocket with a likelihood of a rejection, because this was also previous support, now flipped to resistance, obviously, and we have point of confluence between the golden pocket and the previous resistance area. Not to mention that we have also some EMAs coming in around that area, if I'm not mistaken. Let me check the 3-day time frame. Yeah, also on the 3-day time frame we have there you go, as you can see, 41.2 to 42.9. This is the 18 and 30 EMA on the 3-day time frame, which will most likely cause a rejection for us if that happens. So just be careful, because I'm seeing that the general direction on for now is the bottom of the channel, not the upper part of the channel. But this channel is legit. It's gonna be ranging, so let me extend it. It's gonna be ranging, and we're gonna keep ranging here till we decide whether we're gonna break up or down. So as you can see, if we keep ranging, let me erase these and show you. If we keep ranging here in this channel, something like looks like this, we're gonna be able to reach that 48,000. And then we're going to be able to reach that $52,000 region that we talked about. But it's going to take some time to play out. And it's not happening now. And obviously, I think this will be a rejection here. And I think this is where we break in the channel. And we break 43. And we head downwards towards the 30K region one more time. And then, again, another pop here. So it's going to be a lot of consolidation for a lot of months before any capitulation happens. So that is what I see. Let me just summarize. So monthly time frame is bearish in my personal opinion. There's no bullish aspect to it. Only way the monthly will flip bullish or resume the bull run is if we cross above 20 on the stochastic RSI. Weekly time frame is weekly bullish, and by weekly bullish I mean there's a potential of the consolidation rule playing out, because the indicators on themselves on their own are bullish. They're not bearish on the weekly, but we are consolidating on the weekly, and that usually tells us that the drop is coming. If you see your stochastic RSI around or near the 80 region and we're still consolidating, I urge you to get out, because there will be another drop, a 20 to 25% drop in the market, in my opinion. On the 3-day time frame, we are bearish. We're not really bullish. So the weekly indicators are bullish, but it's consolidation rule playing out, in my opinion. On the 3-day time frame, the indicators are bearish, and I think we're gonna flip and drop, especially because we are also under the EMAs, the 18 and 30 EMAs as well. On the daily time frame, we are bearish as well. There's still no confirmation yet of 100% bearishness, because we need that stochastic RSI to drop below 50 to get that 100% confirmation of bearishness, which is in the next 24 hours it will happen. And I think even though the micro time frames are bullish, I think a move towards 40 or even 42.6, then a rejection, and then a drop to the lower end of the channel is very, very likely, in my opinion. It doesn't necessarily have to need to happen, because the micro time frames also, the consolidation rule applies for the micro time frame. So the micro time frames are bullish, but if we do consolidate and we keep around 39,500 for the next 12 hours or so, then that is called the consolidation rule, and then most likely what will happen is a drop, not a pop to the upside. So just be careful, but the likelihood obviously of reaching the heartline and getting rejected there is more. So I'm still expecting, so let me just show you so you know what I mean for the micros. I'm still expecting a reach of this level of this region. So let me just highlight this. So this region right here is a rejection region, in my personal opinion. That region right there. So anything between 40,300 all the way to, even I might dare say, slightly higher. So 40,000 to 42,000 region, that will be a potential rejection region, obviously. And just be careful, because it's also in confluence with our Fibonacci golden pocket retracement. So as you can see, the retracement is also, well, it's near, it's 0.618, but it's near our rejection area as well, because as you have to understand, if we move forward more, then the likelihood of this getting rejected here becomes higher. I'm assuming that we're gonna pump right now from here. If you pump right now from here, this is where your rejection is gonna happen, around this area. But if you pump, let's say on 8th March, then the rejection area will be around 42,200. So you have to keep your eyes on the charts basically, and see what's going. For now, like I said, I'm expecting the bottom of the channel to be reached, not the higher end of the channel to be reached. But obviously there are exceptions for if you want to reach. So a 4-hour candle close above 40.5 will make you reach the golden pocket region between let's say 41,000 and 42,000. Yeah, 41,000 and 42,500 if we have that 4-hour candle close above 40.5. If we have a 4-hour candle close below 38,500, then most likely the bottom of the channel will be reached, and the bottom of the channel is coming in around like 35,500. So as you can see, my analysis is always based on 2 scenarios and a trigger for these scenarios, which is 4-hour candle closes, in my opinion. Sometimes I do switch from here and there, so I use 3-day, but that's all based on analysis, basically, what I see in the charts. For now, 4-hour candle close above 40.5 will take us to 42,000 region at least for the golden pocket, and the rejection there is highly expected. Whereas a rejection below 40.5, so if we're not able to break above 40.5, then most likely a 4-hour candle close under 38.5 will happen, and most likely that will be your trigger for, you know, reaching the bottom of the channel. So that is my analysis for today, guys. Thank you again for watching the video. Please like, please share, please subscribe to the channel. Make this channel grow so I can keep doing these for you. Follow me on Twitter, link in the description below. I post a lot of good material right there as well, TA related and non-TA related as well. And if you want to inquire about my private paid Discord, please message me on my private Telegram, link in the description below as well. Thank you again for watching the video, and I'll see you again next time. Bye bye, guys.